Are you willing to take on some risk for the chance at massive returns? Today, we're breaking down the QTUM ETF, a speculative tech investment that could either make you a fortune or leave you questioning everything. Let's dive in. QTUM, also known as the Defiance Quantum ETF, is an exchange-traded fund focused on one of the most futuristic industries out there: quantum computing, artificial intelligence, and machine learning. If these technologies take off, QTUM could skyrocket. But that's a big if. This is not your typical safe investment. Unlike traditional tech ETFs that focus on established giants like Apple or Microsoft, QTUM aims to capture emerging companies leading the charge in quantum computing, AI, and big data. This means huge upside potential, but also major risks if these companies fail to deliver. QTUM holds stocks in companies pioneering next-gen technology, including firms developing quantum processors, AI-driven analytics, and high-performance computing. Some notable names: Nvidia, IBM, Honeywell, and Rigetti Computing. These companies are working on technology that could revolutionize industries, or take decades to fully develop. Early-stage investments in disruptive technologies have historically led to massive gains. Think about the internet boom. Those who bet on Amazon or Google early made fortunes. Quantum computing could follow a similar path. The question is now the right time to invest? Here's the reality. Quantum computing is still in its infancy. Many of these companies have no profitability yet, and it could take years, if not decades, before they see real adoption. The QTUM ETF is extremely volatile, meaning prices can swing wildly in both directions. If you're considering investing, you must be prepared for the risk. QTUM's performance has been a roller coaster. It's outperformed during bullish tech cycles but has crashed hard during market pullbacks. If you're looking for stability, this is not the ETF for you. But if you're willing to stomach the ups and downs, QTUM could be an exciting long-term play. QTUM is not for conservative investors or those who need short-term returns. It's best suited for long-term investors who believe in quantum computing, tech enthusiasts who want exposure to cutting-edge innovation, speculative traders looking for high upside plays in emerging industries. If you're risk-averse, you might want to look elsewhere. Not sure if QTUM is right for you? Consider alternatives like QQQ, the safer tech ETF focused on proven companies, which we have a video on our channel about if you want more info. ARKK, a more speculative but still diversified innovation fund. SOXX, a semiconductor ETF for those who want AI exposure without as much risk. QTUM is high risk, high reward. Make sure it fits your strategy. QTUM is not a guaranteed win. It's a bet on the future of quantum computing. If you have a long-term mindset, believe in disruptive innovation, and can handle the volatility, it might be worth adding to your portfolio. But if you're looking for consistent, reliable returns, you may want to think twice. As always, this video is for educational purposes only. Always do your own research and consult with a financial advisor before making investment decisions. Thanks for watching. If you found this breakdown helpful, hit that like button and subscribe to Opportunity Odyssey for more deep dives into stocks and ETFs. What do you think about QTUM? Let us know in the comments.